Hi friends, welcome to this session where we will discuss briefly about India consumption story and the fund Mirae Asset India Great Consumer Fund which to invest in this theme. India consumption story has always been narrative as one of the most attractive investment opportunity, mainly because of country's favorable demographics. So if we look into, 47% of the population is below 25 years of age. More than 2/3 of the population is less than 35 years of age. So India is one of the best demographic dividend. In fact, if you look into from the dependency ratio point of view, India is going to surpass most of its peers. And from the labor force participation point of view, India is going to add 1.5x to the global workforce in comparison to rest of the countries put together. Because of this, if we look into the economic survey also points out to this fact and believe that India rich demographic dividend can add around 1.5% to the country GDP growth rate. And more interesting to note, though India population growth is going to be at around 2% CAGR, but the growth in target consumer base is going to be even at a higher pace, mainly because of rising per capita income, which further gives impetus to the growth to this particular sector. This is also primarily the reason why we are very bullish on this sector from the long term standpoint. Mirae Asset India Great Consumer Fund do play this particular theme while investing into the growth oriented businesses across diverse set of sectors. The businesses which can grow higher than country nominal GDP growth rate. We have not confined ourselves to invest in traditional consumer staple sector, but this fund also do invest in a diverse set of sectors like autos, FMCG, consumer discretionary, retail, as well as certain financial sectors like insurance as well as AMCs. Our investment philosophy is to invest in high quality growth oriented businesses up to a reasonable price. Valuation is an integrated aspect of investing, and we try to take enough margin of safety while investing in this fund. While certain pockets of the markets are expensive, we believe there are enough opportunity to invest in growth oriented businesses with decent margin of safety. We are very positive on the consumer staple sectors, as we believe that sector could see an growth acceleration led by very strong demand uptick into the rural markets because of good monsoon, government stimulus as well as higher agri inflation. Also pent up demand and low base in certain categories like certain discretionary categories and out of consumption categories will also add to the growth. Overall, improving liquidity situation will further accelerate growth for this sector. Also, positive delta between volume and value growth owing to the inflation and subsequently price hikes being taken will also add to the overall top line growth for these companies. Post the pandemic, most of the larger guys has been able to gain market share because of their agility and better supply chain management, which has also helped in relatively larger organized players to report better top line growth and gain market share. This coupled with the distribution expansion will further help in larger players gaining further market share. Consumer discretionary and retail sector was supposed to be significantly impacted owing to the pandemic, but we have seen the sort of a recovery post unlock has clearly surprised, and most of the larger players in this segment has been able to gain significant market share in last 6 months because of their agility and better supply chain management. Recovery in this segment has surprised everybody, and most of the larger organized players in categories like building material, retail and then packaged foods has been able to gain significant market share over last 6 months. Demand scenario for discretionary categories looks upbeat because loss in people's income and the impact of job losses has been far lower than earlier feared out of this pandemic. If we look into long-term growth drivers like favorable demographics, lower penetration, increasing premiumization and market share gain for large organized players remain pretty much intact in this category, which provides very strong growth visibility from medium to long-term standpoint. Companies with agile supply chain management, digital marketing precision and omni-channel presence supported by a strong balance sheet should be able to further gain market share at the cost of fringed organized as well as unorganized players. Overall, consumer sector valuation has seen good re-rating in last 6 months in line with the market performance. Particularly consumer discretionary sector present valuations are even higher than the pre-COVID levels, as optionality in terms of gaining further market share gain from the unorganized players at the faster pace is getting built into the current valuations. FMCG sector present valuations are pretty much in line with what they have been pre-COVID level. At this juncture, we do find enough opportunities in the market to invest into the growth oriented businesses with reasonable margin of safety, and we believe this is a very good theme to invest from the long term standpoint. Thank you for your time to tuning into this session. Looking forward for future interactions.
Mutual fund investments are subject to market risks. Read all scheme related documents carefully.